Welcome to Follow the Money. This is the channel where we investigate, navigate, and break down the geopolitical, financial, legislative actions taking place and identify how everyday Americans can pivot to prosper. So, in my first video, we talked about dollar, the debasement, and how purchasing power erodes quietly over time. And in the last video, we followed what central banks and governments are doing about accumulating gold and assets. So today, we're going one layer deeper because behind the scene, banking rules have changed, and those rules quietly alter how money, risks, and real assets are valued. So Basel III is what changed. So Basel III isn't laws passed by Congress, it's a global banking framework agreed upon by central regulators that determine how banks measure risk, capital, and stability. Think of Basel III as the rule books banks must follow to stay solvent. It defines how banks or how much central banks must hold, what assets are considered safe, and how risk is calculated on the balance sheet. These rules don't tell banks what they should buy. They change what makes sense for banks to hold. So Basel III was born out of the 2008 financial crisis where banks look healthy on paper, but collapsed when confidence disappeared. There was too much leverage, there was too little real capital, and too much reliance on paper claims. So this response wasn't more trust. Basel III basically introduced stricter definitions of what actually counts as capital. So under Basel III, not all gold is treated the same. So you got the unallocated gold and you have physical gold. Unallocated gold, paper gold, there's a lot of, it's treated as a financial claim, and under liquidity rules, the banks can only account for a fraction of its value. But physical allocated gold has no counterparty risk. It's treated differently. You know, it receives 0% risk weighting, placing it in a category such as cash and bonds. So that means the bank can count for 100% of its value towards their strongest capital reserves. So the banks didn't become, or let me put it this way, gold didn't become less risky. Rules finally acknowledge what always was. So for decades, most exposure in terms of gold has been paper-based. Multiple claims, limited physical backing, and it works until confidence matters. Now, Basel III doesn't ban paper gold. It makes excessive leverage inefficient. So when regulators change incentives, behaviors change. So this isn't about collapse, it's about alignment. So before we go further, I want to make a quick clarification. And Basel III doesn't cause overnight shock. It doesn't crash the market. It doesn't force banks to go out and buy gold. And when incentives change, capital relocates slowly, quietly, and deliberately. So this channel isn't about predicting headlines. It's about understanding why institutions reposition before headlines appear. So this helps explain something we discussed in the last video, and that was why central banks are accumulating physical gold. And so why gold is moving from shared vault systems and sovereign control to sovereign controlled reserves. So this isn't coincidence, it's policy meeting reality. So Basel III rewards assets without counterparty risk, and at the same time, global trust is fragmenting. So what does this mean for ordinary Americans? What does it mean for you and I? It doesn't mean everyone needs to run out and buy gold. It means the rules of the systems are changing quietly. You know, understanding Basel III isn't about copying banks, it's about understanding what the system considers high quality, low risk, and durable. So that context helps you navigate volatility with clarity instead of emotion. So you don't have to copy institutions, but you should understand what they are responding to. So Basel III isn't about fear, it's about stability and what the system quietly admits has lasting value. The rules. So this channel isn't about fear, it's about clarity. We investigate the moves being made in government, finance, and geopolitics so you can navigate intelligently, position yourself to prosper. This helps you see the system more clearly. Subscribe, because once you follow the money, the story changes.